All right, so I want to end on a topic that got pretty heated inside of a group that a crypto group that I'm a part of.
Okay.
And but let me just start off first with a video. This has to do with Cardano and Solana. That's the almost like the debate that I'm always in. Cardano obviously is massively underperforming the price of Solana, but the argument that people make for Cardano is that the technology is far superior, or at least they're moving in the direction of it being far superior. And Solana is part of the move fast and break things sort of crowd. But just to set the context for this, I'd love to play you just a small clip from Eric Snowden speaking at Token 2049, a crypto conference,
Mhm.
and I'll come back to you on the backside.
How do we design technology from first principles so we know it's safe?
I mean, when you look back at the Bitcoin white paper, I think what you see is an adversarial approach to the system, and that's really what you have to be considering. A lot of people, and I don't want to name names, but Solana, are taking good ideas, and they're just going, well, what if we just centralized everything? It'll be faster, it'll be more efficient, it'll be cheaper. And yeah, sure, it is, you're right. But nobody's using it, but for like meme coins and scams, because if anybody puts anything significant on it, and then all the states begin moving towards it, it's going to be a system that has levers that people can simply just take from you. You have to be thinking for the adversarial case, as opposed to the convenient, easy, early case. I mean, that's uncomfortable for like a lot of these founder mode people who are like, oh no, we need the minimum viable product, this, that, and the other. Sure, if you're trying to get rich, that'll work. And a lot of people have demonstrated that. They'll continue to do that. But if you want something that will last, you have to engineer it to last. And that means thinking about how it's going to be attacked and making sure it can survive that.
All right, so here I don't want to get into a whole argument as to is Solana better than Cardano? Is Cardano better than Solana? I think that's unfair. I don't know. You're not developing anything on the blockchain, are you?
No, I've dabbled in it, but I haven't taken it very far.
That's right. So I've only dabbled on the Cardano side, and I'm very interested in the things that they're creating, but I'm waiting for more libraries, more frameworks to come out. I want to use the WordPress of things on the platform. I don't want to be there right in the PHP to begin with. So I'm fine with waiting. The argument here is that Solana is outperforming in price, and it's silly for somebody to have any money inside of in Cardano or any Polkadot or any of these things that are not outperforming price. You should be chasing price because that's the point of crypto. Like that was the argument that the person I was dealing with in my group was making. I've been in this internal war back and forth with this person. So the question I want to pose to you is that when thinking about putting any significant amount of capital in crypto, is the focus on number go up the most important to you, or tech, or some other thing?
Okay, so good question. I think, at least this is my opinion, is that the adoption of a cryptocurrency, the usage of it, the utility of it, I don't think these things correlate to price as much as we would like them to over the very long run. When I first started looking at crypto as an asset class, my first objective was, how do I value this thing? As I look at any other asset, in order for me to value it, it has to be able to produce cash. And crypto doesn't really have the ability to produce cash for me to determine how to do discounted cash flow analysis, to give any sense of what this thing is valued at in the future and whether there's a mispricing between value and price. The tough part with crypto is that it's purely, from a pricing perspective, has to just be priced by the market, which makes it very technical, which is what got me very, very interested in technical analysis, over 10 years ago, because that was the only way I was going to be able to follow it, is just to look at it from a trend perspective. If I had any evidence that showed me that the underlying technology was the driver for price, other than the popularity of the project and the market participants driving the price up temporarily because of some milestone or something like that, then it may be interesting. But at least from what I can tell, over the very long run, I don't think there's a strong correlation between those two things. In general, the crypto markets are driven by the greater fool theory and by market momentum more than anything, right? As price goes up, everybody starts to pile in. It's a very technical asset class. And if anything happens that's negative for the crypto space, even if it's not specifically Bitcoin or specifically Solana, they all correlate together in times of panic. So they all end up degrading in performance in very short periods of time, right? If there's a drawdown in Bitcoin, there's a drawdown across the market. So if it were really technology based, if it were really because this tech is better, this blockchain is better, this solution is better, this et cetera, et cetera. If it were really better, then you wouldn't see such a strong correlation during times of panic. You would see some big variance between the two over very long periods of time. I get that there are short periods where news announcements can drive price in different directions, and there are short-term divergences in terms of price relative to other cryptos. But for the most part, they all tend to trend together. So if all of that's true, I'm less interested in whether or not the tech is good or not. It's not what drives price.
So the issue that I have with the pricing as the key metric for it is that if I wanted to make a lot of money in crypto, I would not be focusing on any of the L1s. I would be focusing on meme coins. I'd be focused on these things that jump up 10,000% in 3 days,
I
and
think a lot
try
of
to
people do.
find. Yeah.
Yeah.
Well, that's what I used to do, and spend my time doing that. And you sort of like, this is, some people will think of the layer one solutions, the Polkadots, the Bitcoins, the Cardanos, the Ethereums, and they're like, well, you're still getting the risk, but you're not, you don't have the same, the downside as on the meme coins. And I don't see why not, right? If you remember Celsius, if you remember Luna, if you remember Bored Ape Yacht Clubs, and some of these NFTs, people made the case for these things that no, they're the long-term investments, right? How many times have you heard someone, I'm going to buy this Bored Ape Yacht Club NFT and I'm going to hold it for the next 10, 15 years, and I'll appreciate it in value, and it's art just like any other art. Have you looked at the floor price for Bored Ape Yacht Club? It looks like the freaking Luna chart. It's the arguments that people make in order to confirm this highly risky thing they're going to do anyway, I find to be surprising. The entire crypto space is volatile. The whole thing is crazy volatile. Even Bitcoin could fall to zero if the stars align in the right way. And so I go, well, if I'm taking the risk anyway, I might as well really go to the to the Safe Moons, to the Lunas of the world, to the Pepes or whatever, get my money over there, and then I don't have to sit on something for a year through the whole cycle. Just go in, get the coin when it first starts or when it starts to move, make your money, and move on with your day. If I'm going to focus on any L1s, I see it as an investment, that when I invest money into it is because, just like with a share, when I buy a certain amount of L1 tokens, it's because I want to pay attention to it. It's I'm not going to pay attention to it if I don't have any money inside of it. Just like I'm not paying attention to like a stock if I don't have any money in it. I'm just not going to do it, no matter how much it goes up or how much it moves. So I buy the crypto to pay attention to it, and the investment in time and attention within the ecosystem is what I think will pay off. And I finally hit on an analogy that I thought was very apropos to this whole thing. So I couldn't figure out how to articulate it, this idea, and you'll let me know what you think. To me, it's like learning it's like programming languages, right? Python, R, Rust, JavaScript. These are programming languages that took years to become popular. They had to get the libraries and frameworks. They had to work out the bugs and optimize the language until the point later on where they actually became the use cases that they were made for actually became relevant in the environment. And then boom, JavaScript became popular. And then boom, when you needed R for statistics, because we had the data that we needed to crunch, now it became more popular.
Sure.
But beforehand, it was almost a joke if you're building websites and you were using JavaScript, or you were trying to use any of these languages. People go, why are you spending any time doing that? Meanwhile, how many flavor of the months have we seen for programming? You remember ActionScript, Flash, Cold Fusion? Do you remember what was the other ones? Ruby on Rails.
Still pretty popular.
Yeah, but it used to be that I had to have Ruby on my CV in order to get any real traction when I was applying for programming jobs.
Sure.
And now I might go a long period of time without actually hearing about Ruby. Some of these Cold Fusion, like when I don't even hear anybody talk about those anymore. ActionScript and Flash, and to me, Solana is the Ruby of cryptocurrencies.
Okay.
It's like really popular right now because they're moving really fast. They have tons of marketing behind them. They're paying to have developers there. They're doing all these sorts of things in order to get this hype, because this is idea that if you move fast and you gain adoption, you gain visibility, that you're first to market and you're gonna capture the whole thing. Meanwhile, what is it that we actually think that crypto is going to be the foundation for? Entire new monetary systems, identification systems, privacy layers, all these sorts of apps that can't have a thing that's moving fast and breaking things. What are you talking about? Who's going to put a government voting system on a platform that they're like, there might be some game changing bug in here that we're not
Sure.
going to find out until later on?
Right. All true. And it runs on similar infrastructure than centralized systems do. So if all of these are all still running on AWS, but they're actually technically slower, what have we really gained from an end user perspective? What advantages do we have other than, I get some of the arguments that a lot of this becomes public, it becomes, open, centralized or decentralized. I understand some of those facets, but I think the point that that was being made there in the video was that they're still building it to try to build this artificial wealth in a space that is driven by momentum, because traders are interested in momentum, and they're not really trying to build something that's disaster proof, right? That will hold up the test of time and the test of the test of cybersecurity and DDoS attacks, and the outages that have occurred within some of these environments is obviously worth pointing out, that this is not a fundamentally different technology that has changed the way that we can transact in a safer, more secure way.
That's right. I was watching an interview of Anatoly. Yeah, Anatoly, who's the lead on on Solana, and they asked him about this. What about the outages? There were outages before. What about the outages? He goes, "Oh well, have you looked? We haven't had an outage in 10 months."
Okay.
And I go, "That's not enough. That doesn't reassure me. Are you out of your mind? Come back in 3 years and tell me you have an outage." Whereas you ask for in Cardano land, when's the last outage? Oh, never. We've never had an outage before. And you take a look at the actually, I don't want to go into the underbelly of what's going on these networks, but the argument that people make against Cardano is that it's a nerd zombie chain, that they spend all their times researching and doing first principles and putting out papers, and they go, we want number go up. Unless your number goes up, we don't really care. And I go, there's nothing more attractive to me in a cryptocurrency than a group of ardent developers who care not at all if the price is moving up, right? Like the OpenAI years ago, when they were asking Sam Altman, how are you going to monetize this? It's costing billions of dollars. How are you going to monetize
I'll ask
it?
the AI.
I'll ask the AI.
Yeah.
We'll figure it out later on. And he
Well,
was
they
laughed at.
They didn't need to wait long. If they figured it out pretty quickly, didn't they?
Well, it still took several years, right? It was
Sure.
it was only GPT-3 that they accidentally stumbled upon this format of the chat that turned out to be the thing that the people wanted, because GPT was out for years, and even now they're burning money, but people go, fine, let them burn money. They're making something incredible. But I just mean, or the same thing with Tesla. Like, you're building an electric car. There's never been a new car manufacturer in years, and not only are you going to be a car manufacturer, you're making something new, an electric one. He's like, yeah, we're gonna do it slowly but surely. We're gonna develop technology, and now the Teslas on the street are the iPhones of cars. And so when I see that for Cardano, I go, Cardano seems to have this floor around 30 cents for their coin. I go, great, I'm gonna buy it now. There doesn't seem to be that much downside risk anymore than regular crypto space. Meanwhile, I look at Solana going up and to the right, and I go, what have they made? Memes, dog coins, NFTs? Where's the payment systems? Where are loans? Where are these different things?
Yeah, I'm going to stand on the hill of it's going up because the price is going up.
That's right. Okay. And so that's the thing I'll leave on. If someone says that, I go, fine, no problem. I'm totally on board. Go for it because the number goes up. But then don't tell me bullet point 2, 3, 4, 5, 6 make any difference, because if the number stops going out, all those other points won't matter. You're going to jump to the next ship.
And they
And
don't.
so
How many 90% drawdowns have we seen on these cryptos? Whenever there's a big enough panic in the market, whenever things fall apart, it's just a different asset class, but it's largely driven by momentum and panic.
That's right. Excellent. So if you guys get anything from this, own Solana and Cardano. That's the goal. Why choose one or the other? That's what I was telling my friend the other day. Just own both. And
I was gonna follow that up. I'd prefer not to speculate on which one to go all in on. Just hold a basket if you want to. If you really want to get exposed to crypto, you're gonna do fine if you spread your risk out across multiple in a small basket of cryptos. Now you're still gonna have drawdown risk. That doesn't eliminate that, and obviously you need to do your own research. But like ultimately, if you're not sure which one's going to be the one that moons, well, spread your bets out. That's what diversification is all about.
Did you think Luna was ever going to crash?
No, but I was never really in Luna.
I see.
I remember the craze about it, but I kind of avoided that one. It was still, I think all through those years, I was still just balancing a portfolio of cryptos. So I think it was always the top 30 for a long time.
Okay. Excellent. Because the case for it, when they were saying basically it was a money printed machine. People go, Luna's great. It's a money printed machine.
Yeah.
I go, where in history has that ever been a good idea? A money printed machine, free money. What are you even talking about?
There's no infinite money glitches. They don't exist. Yeah.
That's the Sam Bankman-Fried, the magic box. You put something in and money comes out. You go, then that box is a fraud, because I've seen snake oil salesmen and all kinds of stuff where that occurs. And that's how I feel about the Solana, and which is why I feel like even if I put, 2% of net worth in it, I go, why am I doing that?
Yeah.
I might as well buy Pogs.
So I do want to follow up on a comment that Peter just made here, that Saylor says diversification is selling the winner to buy the losers. Love the quote. Love the analogy. I think you're right. I think he's right about that. I'm saying this from the lens of more of a traditional investor and trader who enjoys my exposure to traditional markets. Of course, I'm going to have biases against cryptocurrencies in ways that aren't going to jive or line up with the more passionate participants in the crypto space. My viewpoint is different because I want to expose myself to markets differently. Saylor is a really good example of a maximalist that is like absolutely tripling down on the long-term viability of crypto in general, right? But not even crypto, Bitcoin. He's like, Bitcoin is the winner, Bitcoin above all. I'm going to own as many of them as possible. This is somebody who believes that the future is a future in which we can transact on Bitcoin, and he sees the utility in it, though. That means he wants to own as many of those Bitcoin as possible, because if we do end up in a world where we're all transacting on Bitcoin and we're no longer denominating our lives in US dollars, well, then he's got more of them than anybody. My wallet's going to have 0.0006 Bitcoin to Saylor's tens of thousands of Bitcoin, right? Or maybe even hundreds of thousands. That viewpoint, I like the optics on that better than I like the optics of whether or not the tech is going to last. Like that argument can be made in a traditional market as well as the crypto market. Like the tech itself still lives independently of the crypto. So if all of that's true, I would probably sooner be more of a Bitcoin maximalist than try to like spend more of my time diversifying. But right now I'm still coming at this from more of a traditional investor lens.
The way I see it is that I'll buy options and perpetual futures on Solana and Bitcoin, but I'll own Cardano.
Okay, fair enough.